Good morning, everybody. It's Hump Day. Thank you for tuning into the Dose. Dosers, the Magic Man, Mark Hutchins here on the mic, joined by Mr. Jereme Kleven.
Good morning, Mark.
With Byron Filson. Hi, Mark. And we have a super, extremely awesome special guest today, and I'm so thrilled to have her back. Miss Tina Tamboer in the house.
Tina Tamboer. From the Cromford Report.
Oh, yes. Missed you guys.
From the Cromford Report, yes. We've missed you.
And like
terribly.
I was saying, you guys remind me that you're here every morning at 7:30 when I get my text. Ding,
nice.
Ding, wake up.
Wake up.
Daily dose.
We have had you on, you're probably one of our oldest guests. I mean, we had you on the first time almost 2 years ago in our old Scottsdale office.
That's right. Was it that long ago?
Almost 2 years ago when we first started the Daily Dose. Mm-hmm. And then we had you on
was it last
about a year ago. Yeah, I think it was a year
last
ago.
Year.
Just for the record, you should check up on the market a little more often.
You're right.
Once a year.
Just saying, you
You're
might
right.
want to,
Byron, you say, ooh, burn.
You don't want to be surprised. That's all I'm saying. You don't want to be surprised.
Thanks for piling on, Byron.
Sorry.
Appreciate that. Thought you're on our side.
Well, no, we got to balance it out, you know?
It's true. It's true. Let's keep it real, right?
Can't leave Tina hanging.
It is great to have you back, Miss Tina Tamboer, from the Cromford Report, one of the most underutilized tools in our industry. No two ways about it. And this isn't just a cheap plug for you and the folks over there at the Cromford, but guys, you need to be using that. So let's find out why we need to be using that.
Oh gosh, there's all kinds of neat stuff happening out in the marketplace these days. And it really depends on who you're talking to. You know, when somebody says, how's the market? My first question is, well, what's your price point? And where do you live? Because that's really going to make a big difference as to how you feel about the market right now.
Sure.
Let's start there, though. So let's start there on a little state of the union, a little state of the market.
Well, pretty much. If you are under $200,000, I think anybody who's tried to show or find a home for a buyer under $200,000 has been very frustrated.
Yeah. Listing agents aren't, but the buyer's agents
exactly. are. And a big thing is that in that particular market, we do have a shortage of supply. And the supply shortage is coming from the fact that you have pretty much two types of buyer or sellers in that price point. And when I talk about it, I'm talking about primarily the west side, west of I-17 within that, 101 loop,
yep.
I-10, 17 loop. And we're in the Southeast Valley, right around West Mesa. Those are some of the Santan. Yeah. Well, Santan Valley is a little bit different because even though you have lower priced homes, you have a lot more construction out there.
There is a lot.
So it's kind of balancing out the supply issue a little bit more.
That was my phone, by the way.
Thanks, Mark.
But the thing is that especially out on the west side, you've got two kinds of sellers. One seller is an investor who purchased their property for $1 in 2011. Right?
I know. So
they're renting
awesome.
it out. They've got cash flow. They really don't have a lot of incentive to sell right now. Mm-hmm. Your second type of seller is somebody who maybe they HARP refinanced or they can just afford their mortgage and they don't have the equity to really move up or to pay for realtor services, things like that.
And a new mortgage on a higher
So you try to
price
market to these areas that are frenzies, literally frenzies, and you're just not going to get a whole lot of good quality leads in return because that's what's keeping our supply low. However, once you go above 200, we're starting to see an increase in supply between 200 and 300 for sure. And then certainly over 300. If you get into the 500s now, I'm getting calls from people saying, wow, this market feels really slow. And the truth is it's not slow. We're selling more in every price range this year than we did last year, except for the under 200 because you can't buy what isn't for sale. But we have more buyers out there, but the problem is you have more sellers too. So it feels very slow to people, but it's pretty much more balanced.
Do you have some handy statistics readily available right now? I mean, what does it look like last year versus this year in terms of activity level? I mean, maybe the number of transactions per month or maybe first quarter, 15 versus 16.
Well, yeah, pretty much right now when we look at week by week on the sales line, between 200 and 300, we're up 17% over 2015.
Wow.
300 to 500, we're up 12% from last year.
That's
huge. 13% in the 500 to $1 million. But then you get over 1 million and then it really starts to slack off. Yeah.
What's that look like though?
It's actually currently we're down 3%.
Oh, wow.
It's not really that bad. It's just, but it is down. It's not nearly as
And
exciting.
that's quarter 15 versus
No,
16?
that's week by
That's
week,
week by
like
week. Oh, week by week.
year-to-date sales week by week. So we're in approximately week 14, 15. So when you accumulate how many we've sold so far this year, we're down just a little bit on the over 1 million. And part of that can be our second home markets not doing so great.
Right.
The Canadians have been really struggling with the oil prices. It used to be the Canadian dollar used to follow oil about 80% correlation. Now it's like 95%. So while we've been enjoying all those wonderful gas prices, it's been crushing. I mean, if you can imagine when we had an oversupply of houses here and it threw our prices for homes way down, it's very difficult to maintain your industry and maintain all of the support services and an economy around that.
Yep.
Same thing with oil in Canada. When you have too much oil in the oversupply of oil and pushes that price down, you can't what's the word I'm looking for? Support. I just said it.
There it is, support.
You can't support the industries around it. So we're already starting to see, especially in Canada, where their dollar has become much weaker to ours. So for them to buy second homes down here is Right. But what they are doing is selling, because for our $140 a square foot that we pay, they would pay $197 or something like that, right around the 190s.
Much higher, yeah.
And so it makes sense for them to now try to sell their properties that they bought in 2011 through 13 and try to offset some of those losses from the oil investment areas. And I mean, we're starting to see foreclosures start to creep up in areas like North Dakota and Texas. Luckily, not a whole lot out here.
Not here.
We don't have as much of a reliability on the energy, but
Has that stayed consistent, actually, the short sales and foreclosures? Have they stayed consistent or gone down?
They
Here
consistently
tremendously,
here.
No, I know they have
Yeah.
over, you look back, X amount of time ago, but I mean, are they continuing to do that?
I would say they've flattened out. I think that the foreclosure rate
3% of
it's I would say it might be around 5 right now.
Okay.
But
So I remember, I think it was maybe a couple sessions ago when we had you, maybe it was 18 months or 2 years ago. That was the big hot button item that we were talking about at that time. I just got a flashback almost of like, if you guys recall, we were all talking about the shadow inventory.
oh my gosh.
And remember, yeah.
I think
Oh
you
my
were right,
gosh.
Tina.
Yeah, so
I think everyone, she was right.
So Tina predicted then that it was not going to be an issue. That I forget the exact. I want to
exist.
say that it was if every single bank-owned property went on the market at that time in one day, that we would have had like 17 days or something of inventory. So even if it came on, if it was this big thing everybody was talking about, it was going to be a non-issue. What's the current, I guess, hot button item for people out there? I mean, is there anything that that people are asking you that you get asked regularly? Are people concerned that there are more investors in the market now than there were X amount of time ago?
We do not have an issue with an excess of investors in the market. That not nearly where we were a few years ago.
Right.
A lot of them, and a lot of them are
pulled back.
Canadian. So when the Canadian dollar started to pull away from the U.S. dollar, it just didn't really make sense for them. So
Any other hot button items, I guess, that people are chatting about that we're not tapped into?
the luxury piece is really the big thing, because of your luxury clients who may have had exposure in the energy industry in their investments. That might be some of what is squashing the demand on the upper end, because we have to realize that emotions do play a lot in real estate, and how people feel about their personal wealth, or the values of the homes, whether they're going up or going down. So there's a lot of there may be a lot of insecurity, because we just had China too. Remember, China kind of went a little crazy last year. So those poor rich people. I have some sympathy for them, but I don't think it's a permanent thing at this point. We're watching it though.
To be down 3% is not a huge,
not a huge
especially
thing.
when you expect it to be more, just given the activity in the lower end.
But what is happening is we've had a huge increase in the level of supply on your upper luxury side, end. And what we've seen is a very noticeable increase in price reductions. So one of the charts you can look at, if you really want to see which areas are shifting in terms of seller's advantage, look at those price reductions because that's how they respond right away.
So do you guys have reports on agents not knowing how to price homes correctly?
That could go with your price reduction
I'm just
chart.
kidding.
Just
That's
saying.
respect.
That's a good
You know
one.
what's interesting though is that last summer, this was a really interesting trend. We started to see the weekly price reductions rise in your under 200 market.
Oh, wow.
Which is ironic,
Very
isn't
surprising.
it? Because why would a seller with a listing under 200,000 need to have a price reduction?
Right.
And that goes hand in hand with what's one of the most common complaints for people looking at homes under 200.
Common complaints under 200?
Yeah.
Just too hard to find it.
Too hard to find. I heard they're not in very good condition.
Oh, sure.
And of course,
They try to bump up the price relative to that price point.
it's like, I think that there's a seller expectation of, they know that there's a shortage of supply. So certain
Right.
sellers,
Exactly.
their last reference point is say 2013, where you're making 20% annual appreciation in that type of seller's market. Well, we don't have the same kind of buyers today that we had in 2013. We don't even have the same kind of homes. Our homes now have plumbing, things like
An
that.
AC.
Kitchens,
And a roof.
All right, let's
Yeah.
dive deeper. I'm thinking me and Mark are doing the same thing. Let's dive deeper tomorrow on the state of the market with Miss Tina Tamboer of the Cromford Report. We'll keep this going, guys.
All right.
Talk to you tomorrow. For now, go out and get it. Have a good day. Happy Wednesday. Roll on, roll long, roll strong, Mark. You're getting ready to talk about a little workshop Wednesday friendly reminder to all there all day
Jeremy.
today.
Yes.
I can tell.
I was going to go actually before the hook. I actually wasn't hooking. But yeah, workshop Wednesday today, guys.
You were.
I was for you, Byron. At 9 a.m. Scottsdale office goes till 4. A lot of good stuff. Orientation at 9. Contract class at 10. A little break for lunch. And then we're going to blow your mind with some lead generation and a couple other things tomorrow or today. So see you then. And see you later, Byron.
Oh,
See you guys. Talk tomorrow.
bye, Mark.
See ya.